Wait, if this is your first time seeing this video, you're walking into the story from the middle of the storm. Part 1 exposed the hidden mistakes, the traps keeping people broke, and the first key to escaping the cycle. This video continues from that exact moment. No rewind button. No recap safety net. So, before you continue, go watch Part 1 first, because what you're about to hear next will hit completely different once you know the full picture. I'll wait for you on the other side. Now back to the video. This is the Chapter 1 promised you, the one that rewires how you see every bank interaction permanently. The mindset shift is this: you are not a customer seeking the bank's favor. You are a counterparty in a commercial relationship. You bring deposits, they need deposits. You bring repayment behavior, they need it. You bring business, they compete for it. That is the reality. Act accordingly. Every financial product a bank offers, ask one question before accepting it. Who benefits more from this product, me or the bank? If the answer is clearly the bank, decline or renegotiate. If the answer is genuinely you, accept and use it fully. Insurance products sold by banks often have higher premiums than independent providers. Investment products offered by banks often have higher fees than direct alternatives. The bank's product is not always wrong, but it is never offered primarily for your benefit. Understand the Bank of Tanzania's role. The central bank sets policy, interest rate floors, reserve requirements, exchange rate management. When the Bank of Tanzania raises its benchmark rate, commercial lending rates follow. When it eases, borrowing becomes cheaper. Understanding central bank signals helps you time major financial decisions. Taking a large loan just before a rate rise is expensive. Waiting for a rate drop can save you significantly. The wealthy watch central bank moves. Most people do not know they exist. The final principle: keep your financial options open. The worst negotiating position is desperation. A person who urgently needs a loan gets the worst terms. A person who has savings, has alternatives, and could walk away gets the best terms. The entire wealth building system we have built across projects 1 through 10 builds toward this position. Emergency fund, side hustle income, investment assets, property equity, tax efficiency. All of it creates the financial position where you negotiate from strength, not fear. Let me get specific about Tanzania, because the banking landscape here has unique features and unique opportunities that general financial advice never captures. Tanzania has over 40 licensed commercial banks. From CRDB and NMB, the largest by customer base, to smaller specialized institutions. Each has different strengths. CRDB has strong agricultural lending. NMB has deep rural reach. Stanbic has sophisticated business banking. Knowing which institution fits which need is the beginning of using the system smartly. SACCOS savings and credit cooperatives remain one of the most powerful and underused banking alternatives in Tanzania. Lower loan rates than commercial banks for members with strong savings history. Community-based governance. Profit sharing among members rather than external shareholders. The person who builds a deep SACCO membership and uses it strategically for borrowing often accesses capital at better terms than a commercial bank will ever offer. SACOs were covered in Project 7. This is their banking dimension. The microfinance sector. For entrepreneurs without formal banking relationships, microfinance institutions offer working capital loans at accessible entry points. The rates are typically higher than commercial banks, but the access thresholds are lower. Used correctly, a microfinance loan to fund a productive business cycle with the business revenue repaying the loan is a legitimate wealth-building step. Used incorrectly for consumption or without a clear repayment plan, it accelerates debt. Know the difference before you borrow. Foreign exchange management. For anyone earning or holding USD, euros, or other hard currencies in Tanzania, understanding the Bank of Tanzania's exchange rate framework matters. The shilling has depreciated historically. Holding legitimate hard currency savings where your situation permits is a hedge against that depreciation. Understanding the legal framework for foreign currency accounts and using it is something the wealthy in Tanzania do routinely. Most ordinary earners have never asked their bank about it. Let us bring this all together. Banks create money through debt. They profit from the gap between what they earn on your money and what they pay you. They charge fees at every interaction. They cross-sell products designed for their revenue. They hold data that benefits them. None of this makes them evil. It makes them a business. Your job is to understand the business and position yourself to benefit from it rather than simply fuel it. You now have the complete 10-video WealthWhisper wealth building system, investment mindset, side hustle income, African financial context, real estate, tax optimization, and now banking intelligence. 6 pillars, 1 complete architecture. The wealthy did not build their financial position from one insight. They built it from a system. You now have the system. The only variable left is whether you use it. If this video gave you one thing that changes how you interact with your bank, share it. With someone who is being charged fees they do not know are optional. With someone signing loan documents they do not fully understand. With someone keeping all their wealth in a savings account earning nothing. The information has always been available, but it was never easy to find. Now it is. Pass it on. Subscribe to our channel, One Money Truth, every single day. The wealthy are not smarter than you. They simply knew things earlier. Now you know. Use it.